We're now at risk of getting a third and even larger crisis, which could bring down the system. And central bankers know this as well, so they try to change the system before the real big crash hits. On average, every 92 years we get a new world reserve currency, and that's what we call monetary resets. We all know that after the 90-year cycle, you always enter the period of crisis, of wars and conflict. And we're now in that part of the cycle. That frightens me a bit because we're on the verge now. You can feel it, you can see it, that the Western financial system centered around the dollar is in decline. China and Russia were saying they were seeking a reconstruction of the current world order together around the BRICS Alliance. All these countries who didn't join Western sanctions is 140 countries. It's over 6 billion people who no longer follow the West for guidance. Next, you expect a much larger conflict between the West and the East. In 2 to 3 years, could even be like hot war. China has been vocal about this. If the US doesn't change course, this will lead to a conflict and we won't back off this time. Certain groups within the US have openly called for war with Russia and China in 27. And actually that's the big reset. It has already started. Don't ask me when will the reset start. We're in it.
Welcome to the Microscopic Podcast presented by Gold Republic. My name is Alexei Dronov, and in this format I invite you to look at the world through different lenses, to see what's hidden in plain sight. We'll dive deep to understand the forces that drive macroeconomics, financial markets, and the emergence of a new monetary system with some money like gold, silver, and digital assets like Bitcoin. We'll also investigate how geopolitics and power games shape the world we live in, but also what can we learn from history to understand the present and prepare for the future. I hope you will get fresh insight and enjoy this conversation. If you do, as always, please give it a like and subscribe, but also leave your actions down below in the comment section and share it to those who need to hear this. But before I start, I'd like you to know that if you open an account at Gold Republic, you will receive 1 free gram of gold. Just click on the link in the description. Welcome, Willem, to the Microscopic Podcast.
You're welcome in our office.
I was about to say, we are right now in this very actually historic building that you told me about before we started.
Yeah.
It's more than 400 years old.
Yeah, it's remarkable.
And what kind of building is it actually?
There's a very long history published on the internet about this place, which is called the Haringbuis. That's the name of this building, locally known as the Haringbuis. And the Haringbuis is the name of type of ship they used to catch herring 300-400 years ago. And then they had to walk, we're 2 miles away from the beach, Zandvoort, 2-3 miles. And then they used to push these handcars full of herring to Haarlem and Amsterdam. And when they reached here, they were tired. So here they took a bite and a drink and could rest. But this is a very famous building because it's in the middle of the street. So everybody who ever went to Zandvoort, they know the old heritage building just before the roundabout.
And here we are.
Yeah.
Without the herring though.
Yeah.
So thanks a lot for welcoming us into your office. We've known each other since a couple of years now, actually.
Yeah.
We've been to South Africa together in Cape Town where we organized an event, and also in Dubai, the Future of Finance. And so I know a little bit about you, but I did some research and I found out that actually your father is a nuclear physicist, or was a nuclear physicist in CERN in Switzerland. What do you actually take from him?
Yeah, I used to think that we didn't have too much in common. But later on in life, actually a few years back, I thought I might have more in common with him than I always thought, because he spent most of his life as a scientist, as a nuclear scientist, studying the smallest particles on Earth, or actually in nature. And I spend most of my life now studying, thinking about the largest system on Earth, the financial system. Mm-hmm. And in a way, he was always working, he was always reading. He was not the social guy. I'm a bit more social than him. But I prefer to be alone, thinking, reading, working. So.
And you were also a photojournalist. It's kind of like how you started, like one of the many careers actually that you have. You're a colorful man. You're also a Dutch investor, an entrepreneur, financial expert. People know you for your book, The Big Reset, published in 2013. And one of the things that I found also interesting is that you had the scoop of quite a few pictures back then. Of the abduction of the Heineken brothers, and also what you were telling me about the crash in the bomber.
The LL 747, the plane.
Yes.
I was a photojournalist that time. It was Sunday night. I remember it like it was yesterday. It was 30 years ago. And actually, I was at the desk of Het Parool, Dutch Daily, at the Wieboudstraat, to bring my pictures of the sports over the weekend. I also shot a lot of sports during that time. And I had a guy who always tipped me when he heard something on the police scanner. And I had heard 2 or 3 sirens, passing by of the ambulances. It was they were parked nearby to be outside. So, and then he called me, and I said, a plane just crashed in the Bijlmer. So I ran away to my car. My camera was always ready. Unfortunately, it was filled with color film. We used film at that time. Most of my colleagues still shot black and white, and I had color film. And then I just chased the ambulance because they kept racing past me. And then I just jumped out of my car, put the car somewhere next to the street, and then I ran to the building. And I thought there must have been a few hundred people laying there, a crash of a Boeing 747. But it turned out it was a cargo plane, but it crashed into this huge apartment building, 10, 12 stories high. And the whole building was on fire. And the first fire brigade just arrived. So there were these 2 tiny guys holding the hose, and there was no water, hardly any water, and the whole building was on fire. They later explained to me, I talked to them later, we needed to do something for the audience, but we knew we couldn't do anything,
Wow.
So they were standing there with this hose and the whole building on fire. And then there was a lot of smoke, but fortunately there was a wave of wind and the smoke was cleared for a second, and I pushed the camera, I had a flash, and the picture shows the whole building on fire and these 2 guys, like small puppets there. And it was 8 p.m. So it was just before deadline for the Monday paper, and I used to work for Algemeen Dagblad, which was based in Rotterdam. So I only stayed there for 15 or 20 minutes and then ran to my car, raced to Rotterdam to be in time for the deadline. And so I missed most of the action, actually, but I knew I had some great shots, and then they published it it was all front page.
Wow.
I actually framed that front page this last week because I found it back, and it's quite special. Yeah.
So what actually brought you to then financial journalism? Because it's quite different, right? I mean, there's much more dry. There not that many pictures to be taken. It's not some photojournalism. So what triggered you into that?
Well, what I liked about journalism were 2 aspects. I always wanted to understand the world around me, and maybe that has to that could be explained because my youth was a bit insecure. My parents divorced when I was young, and I was sent away to family and later to foster parents. So I always want to understand maybe the risks around me. And I wanted to see a lot of action. And in journalism, I always found myself surrounded by action. I choose that lifestyle. I loved it. I needed a lot of drama. And I was intrigued by the fact that you could witness something so special. And I loved the art of photography from a very young age. So when I was 15, 16, and I saw a collection of news photos in books, I thought, that's amazing. People who've been there, who witnessed that. So I wanted to have that adventurous life, but I also wanted to understand systems. So when I started traveling with the Dutch royal family, I better understood how a royal family works and their place in society. And when I was witnessing all these riots in the 1980s, I understood better how local government operated and how police reacted on riots and how people behaved in riots. So it's like a high pressure cooker of learning if you're in those environments. So you hear the same kind of stories when people go to wars. I actually went to one war, the Gulf War in 1991, and I heard 12 Scuds exploding in Tel Aviv while I was there. And that was too much drama for me. I learned I don't want to be in war, that's too much. But I always wanted to understand the world. And when I had been a journalist for quite a long time, 10, 20 years, I got more and more interested in making money, learning about the world of money, the system of money. And this was like a natural evolvement. And at the end of my career as a photojournalist, I was the picture editor-in-chief of Het Parool. So there was like a management job. I was in charge of that desk. But next to our desk was the economics desk. So these were my colleagues, and we spoke with each other. And I was investing at that time. I was buying apartments in Amsterdam, buy-to-let market. And I had all kinds of ideas about the financial world, and I wanted to write them down. So I just wrote some stuff and I gave it to them. So they gave me a column, and that's how it started. And then the next phase was that I didn't want to be the reporter. I wanted to be so specialized. I wanted to be so well informed that I was not doing the interviews. I wanted to be interviewed. So thanks for being here.
It worked.
Yeah, but this was like a natural evolution. Because even 5-6 years ago, I made these interviews for Café Weltschmerz, interviewing all these gurus or the president of the Dutch National Bank. But nowadays, I feel very comfortable to be on the other side.
Mm-hmm. There's some people call you the oracle of Amsterdam.
That was only Max Keiser.
That was only one.
But you know Max Keiser?
Yes.
He's a very special guy.
Early Bitcoin guy.
Very early Bitcoin guy, a Wall Street guy. A very smart, independent thinker. And I was interviewed twice by him, quite early in my career. And the second time he came to Amsterdam and the Big Reset was just published. And he was standing there on the bridge, the Dutch Canal, Amsterdam Canal, and he was waving the book, this book, explains it all. And here is Willem Middelkoop, the author, the Oracle of Amsterdam. So I was, of course, very happy with his publicity. And I always liked that name, so I copied it a bit.
It's a nice name,
especially for Max Keiser, because he's one of the OGs in our space. He's such a bright guy.
So why would he call you an oracle?
Well, I think he followed my career a bit. He still follows me on Twitter. His wife follows me on Twitter, and he must be aware that in my first book, which was only published in Dutch, Als de dollar valt, I predicted actually a great financial crisis within 10 years. And I said that in 2007, and it all happened in 12 months. The book was published August 2007. That was the month the credit crisis came to surface. People started to write about that. But I wrote the book in 2006, published it August 2007. So the book was finished before the credit crisis started. And when this great financial crisis after the collapse of Lehman started, I was discovered more or less by national TV. Mm-hmm. I used to have my own show at RTLZ, which is like a financial economic program. But then after the fall of Lehman, you had these national talk shows and they all were looking for experts. And then I was live on Dutch TV nationwide every day. 7 out of 10 days I was live on TV. So that was my breakthrough. And I became known in the Netherlands for the guy who predicted the credit crisis. And then we got the big reset, because they always ask me, what can we do to solve this crisis? And first few years I always said, I don't know. I was very happy that I saw it coming. And I could explain what was happening, but I didn't have a solution. But in the years after 2009, 2010, 2011, I started to learn more about the financial system. I started to learn more about how central bankers think and what central bankers can do, because the financial system isn't man-made or isn't given by nature. It isn't given by nature, it is man-made. So you can change the financial system. And I got intrigued by what can we do to what do I expect central bankers will do to bring this financial system towards a next phase? Because you can change the system. Mm-hmm. Has been done before. And that's what we call monetary resets. And then I saw the term, the big reset, in a zero hedge speech one day. And I thought that's a great title, the big reset. So I named the book The Big Reset. Not to be... we had the Great Reset written by
Klaus
Schwab a few years later. So everybody is confused now. But
so you think you inspired him with...
I don't know. But our books are similar in a way, because we both describe the big changes coming to the system. Mm-hmm. But I focus more on the financial economic part, and he focused more on the social part. No.
Well, there's a lot of, especially in the Twitter space and let's say the camp of the most system skeptic part, that see his plan as kind of like if you really extrapolate it into some form of a framework for a new society that is at the interest of a very particular type of elite. What some people call the globalist elite.
We should be careful about talking about the elite, because I learned from a publication from the AIVD. You know,
the AIVD?
The AIVD, it's like the Dutch CIA.
Oh,
you know, if you talk elitist, they say you're a domestic terrorist, you know.
Is it?
Yeah.
You have a precedent to share about that, or?
No. Well, it's in writing. It's in writing. So people who talk a bit too much about the elitists and the dangers around their new system, they are like branded domestic terrorists. So
okay, so we're not allowed to talk about it.
Yes.
You are someone who is a very, very visual type of thinker. And that also means that you look at charts, and those charts that tell you stories.
Yeah.
My question to you is, what is your favorite chart?
I always like visual information. That's why I've been a photojournalist probably for 20 years. Because pictures can communicate so strongly. There can be so much information in one picture. One picture. That's why we have the meme culture. Mm-hmm. You know, one meme can tell the whole story. Especially younger generation, they love the memes. But when I look at a graph, it tells me. When you show me a graph, it talks to me. I see so much information in there. So I always love to look at charts. I use a lot of charts and graphs in my presentations. Actually, I have a collection of around 2,000 charts I ever used, and I want to. So it's like a real collection. But the one I like most is the one which is showing 2,000 years of history, and it shows which country had the largest percentage of world GDP. So was China important for the economy in the 1400s? Or was the US important? Well, the US wasn't important in the 1400s because there was no economy in the US. So you see the change over time of the major economic powers. And then you learn from that graph that 2,000 years ago, it was all about Asia. And then, well, of course, the Romans became important as well. But if you go way back, you know, the Chinese economy, the Chinese system, the Chinese culture, it goes back 10,000 years, and not much has changed. But over these years, you saw the demise of the East, the rise of the West. Then you have the peak US is around 1950s, where the US is a very large part of the world economy. But since the 1950s, actually, the West is already a bit in decline because Asia is on the rise. And now Asia, China, and India, is such a large part of our economy because so many people live there. So when I look at a graph like that, it shows the world economy and the change of the power dynamics over the last 2,000 years. And I think that's amazing. You can all find that in one simple chart.
And do you see in that sense patterns? So as you said, there's been a phase where Asia was a very strong factor and driver of innovation, culture, and in that sense also like the GDP growth. And now it's been dominated by mainly the Western Hemisphere. Where are we now? Like, are we now switching back towards a more, and maybe actually I would like to define the word because we talk about the East, but in fact it's, if I hear a lot of experts, they talk also about the global South.
Yeah, but I would love to focus on the patterns first, because you mentioned patterns, and that's where maybe my world and the world of my dad
collide,
yeah,
like a CERN particle collide.
Because if you study nature and physics, you know, everything is a wave. Everything is a cycle. Sound is a wave, light is a wave, energy is a wave. And when you study financial markets, everything is a cycle. Economy, everything is a cycle. So the older I get, I'm 62 now, the more I start to see the financial system as part of nature. It's very odd. But if you look at the dynamics in financial markets, you know about Fibonacci?
The golden
golden rule. You know. This is just mathematics. And all these rules you see in nature, you also see them in financial charts. Corrections always stop at a certain level, 30.8 and 68. Well, and that
what
intrigues me.
Sorry, what is?
Oh, it's like where corrections end or start. So if you have a huge bubble in the market and then there's a huge correction, the correction always or most of the time ends or stops at a correction of 68% of the rise, which happened before the fall.
Okay.
And I love to study the patterns, to see the patterns. And then you start to realize that the largest changes in financial markets are not man-made, but it's more like away from nature. And when you study cycles, you find you have these 80-year cycles. And Neil Howe, he has this famous book, The Fourth Turning, explaining how every 80 years we end up into a big crisis. Now it's 2024. It's 80 years after 1944, which was the end of the Second World War. So we're in the winter phase of the 80-year cycle. We're in the war phase, actually. And that's why the risks are so increasing. And that's why we see all those conflicts, and we see the change of the leading power in this world. The US, of course, was the leading power after the Second World War. They proposed to start using the dollar as the new gold in 1944. And on average, every 92 years, we get a new world reserve currency, every 92 years. So that's a nice pattern as well. So, and that helps me understand where we are in the cycle, where we are in the system, and what we can expect next.
Mm-hmm. So we're actually going to talk about all those topics. Yeah. And one of the first questions that I actually would like to address is the inflation question.
Yeah.
So central banks now have kind of proclaimed, especially in the US and in Europe, that inflation has been tamped down back to more or less the 2% mark. Is that proclamation of victory over inflation something that is really something that we can celebrate, or is it just something temporary? Like, what does this chart tell you?
Well, when I think about inflation, I always have to think about this slide about the last era of inflation, which was in the 1970s. And when you study that graph, you see three phases of inflation. The first was in the late 1960s, and then it came down. And then there was the second wave after Nixon took the dollar off the gold standard. And then it came down in the middle of the 70s, and then you had this huge, big inflation, this big run in the late 1970s. And then Paul Volcker needed to jack up the interest rates to 20% in the US to tame inflation. But these were also three waves. And I often say that this time might be quite similar, that we've had the first wave. We tamed the inflation, like I said, and now the second wave soon might start because of rising oil prices, war, or whatever. War is very inflationary, and then might come down. And many of the major moves in financial markets, but also outside financial markets, come in three waves. COVID was three waves. The Mexican flu was three waves. So you see this pattern as well in and outside financial markets.
It's a bit of a trinity part, the golden number 3.
Yeah. You see, that's why all these patterns are so intriguing. And I became much more a follower of the Elliott wave theory, which is often used to explain runs in financial markets and corrections, because the behavior of the general public, of the general investor, is always the same. It doesn't matter if it was 100 years ago or 150 years ago. You always have the panics, and you always have the manias and the hypes. And that's why financial markets are so intriguing, because everything, what happens in the world, geopolitics, the behavior of the general public, you can all find it back into these charts and patterns. And that's what I find intriguing. You see the same. I love to study meteorology. To study the weather. It's the same.
Meteorology.
Meteorology,
okay.
Yeah. So the weather. Because you see the same patterns, like what's happening with hurricanes and tornadoes and pressure systems. And when pressure is building, when there's too much pressure in the atmosphere after so many hot days, you get a thunderstorm, and all the pressure, is released by thunder and lightning, and then it stabilizes again. And it's like a crash in financial markets.
It's also they also call those things, I think, correct me if I'm wrong, depressions.
Yeah.
As well.
All these systems fascinate me.
So on stage at the Bitcoin conference, you were saying that you actually sometimes are have like a window of entry, or you're able to listen to what central bankers are saying, and this is part of a think tank.
Yeah.
Which name you will remind us?
The OMVIF. The OMVIF,
exactly.
Yeah, in London, London-based think tank on monetary affairs.
What across all those years did you learn about it? Because inflation is obviously a monetary phenomenon, and central bankers have inflation as one of their mandates around the world. So, what do you think central bankers are? And I want to now take the analogy of the two firemen that are trying to extinguish this massive building and saying they need to do something so that it shows that they're trying to do something, but in the end, they have not much effect. Is this some comparable?
Oh yeah, yeah. What do central bankers do when there's a crisis, like a Boeing 747, crashing into a urban environment? You have a big crisis. So what do the firemen do? They bring liquidity to push down the flames. And what do central bankers do when there's a major crisis? They bring liquidity to the system. So they open the valves, they take the hoses, they push down the flames, stop the crisis, and then liquidity is being, turned back again. So you see many of the same patterns.
But now this liquidity as well, in turn, is also provoking asset inflation.
Yeah.
So we've seen this kind of boom and bust cycles, and again, maybe good to put it and frame it with the patterns that you were actually mentioning. And it seems like, and you also describe this in your book, that those boom and bust cycles are always more frequent and also more heavy. They always have very dire consequences for the systems, in that sense, the economy and the financial markets.
But that happens late in the cycle. So once a cycle is reaching its end or its peak, there's a lot of tension building up into the system. And when you have too much tension in the system, you get all kinds of stress reactions, and in financial markets we call that market crashes. And these market crashes are a way to stabilize the system again, the lower level where the stress is gone. But once you're at the end of a large cycle, let's say the 80-year cycle, there's so much stress and instability in the system that the risk of very major dislocations or accidents increase a lot. And also in crashes, you often see three phases. So the first crash in the Western financial system, as I see it, in recent history was in the early 2000s when we had the crash of the internet stocks, the internet bubble. And then we had a build-up. We lowered the rates, central bankers lowered the rates towards zero. Then you had the build-up of all the housing prices, and you got the collapse of the housing market, especially in the US and Europe. That was in 2008, so it was the second crash. Then we lowered rates again to zero. And we solved a credit crisis by adding much more credit to the system. And we're now at risk of getting a third and even larger crisis, which could bring down the system. And central bankers know this as well. So they try to change the system before the real big crash hits.
And this big crash, do you see signs now that back then in 2007, when you wrote your book, do you see now similarities that actually will unfold in the near future? I mean, it's always, of course, everyone wants predictions and know when things will happen, but
just look at I always try to look at the warning flags, the yellow and the red flags, because they're always signs. They're always signs. And when you look at the price of gold, huge warning sign when that explodes. Huge warning sign. It tells you inflation is not contained, not controlled. It tells you the system isn't stable. So, as long as you know which warning signs you have to watch, you probably know what's going to happen. Mm-hmm. I'm always surprised that not more people are seeing these signs and know what will be next, because it's, for me, it looks so simple. Mm-hmm. But maybe I'm more sensitive for it.
And also, I think the monetary system is a complex system.
Very complex.
Very complex system. So, for
just
instance,
like the weather,
exactly,
or other systems.
It can be also unpredictable, and just like the weather, there's geoengineering where you basically change the patterns of the weather, and maybe we can see it. I'm making a big comparison maybe here, but the same way as you also mentioned with the financial markets behaving a bit like nature, and central bankers and others that nature is seen as maybe a free market, and that's what a lot of people that believe in the free market also want, is less intervention. And the humans would be then the central bank, and the financial markets would be then nature. And the more intervention, the more like those disruptions happen, and maybe they actually not even fix things, they make even things worse. How do you see that?
You just touched upon the Bitcoin conference, and when I'm at the Bitcoin conference, all these Bitcoiners always say, well, we have the best form of money, and I think technically Bitcoin is the best form of money, but that doesn't mean Bitcoin will be the next world money or world reserve currency, because the people in power, the people who make the laws and the rules, the people who own the guns, they're not willing to have a change of control. So they will stick to their position, and they will try to change the system in a way that the can be kicked down the road for another 5 or 10 years. And I would think the Bitcoiners are a bit naive to think that it will all collapse and then we'll take over and live happily ever after, because I always call that the Mad Max scenario. Mm-hmm. So when everything collapses, your neighbor with a larger gun will steal away your Bitcoin
or your gold.
Yeah, or your gold, or maybe even your wife. Mm-hmm. That's what happens when society breaks down. Again, go back to the weather. We had Hurricane Katrina in New Orleans. What was it, 10, 15 years ago? There were pictures that the police was looting as well. Within 24 hours, they were looting. So society can break down very easily, very fast. And that's why I always tell the Bitcoiners, be careful what you wish for. Mm-hmm. You better help central bankers to stay in control.
Because that's what you think is going to happen if that control is lost.
Well, that's the Mad Max scenario.
Okay. If we look now more like on the geopolitical sphere, China is a bit of in a dire situation right now. It has basically struggled with its real estate market. It's struggled also with its stock market, and now it's started injecting stimulus and again around 700
liquidity.
Billion. Exactly. Mm-hmm. And someone you might know, Hugh Hendry, that I've interviewed just a few weeks ago, gave a really
the crazy but brilliant Hugh Hendry.
Asset capitalist. He's one of a kind. He's a financial poet. Only if he did not exist, I think someone would need to invent him.
No, but he lost his hedge fund. Huh?
He did. But anyways, his thesis is that China will be at the epicenter of a big deflationary shock that will spread catastrophic waves across the financial system, and also kind of betting against the Chinese economy. which is the world's exporter, which is also a big, let's say, element and player in the current geopolitical, I would say, clash of what we would call the West against the East or the global South.
West against the rest of the world, I would say.
Yeah, that's also a pretty accurate description. How do you see, first on the, let's say, economic side of things, the situation in China right now?
Well, the collapse of China has been predicted for some 40, 50 years now.
40, 50 years?
40, 50 years. People have been saying, you know, this can't go on in China. They will have a hard landing. They will have a collapse.
And why is that?
Because we had this sudden rise in economy where, well, almost 1 billion people were lifted out of poverty. Well, these cities have been created. There are over 100 cities in China with over 1 million people. How many do we have in the Netherlands? Not even one. So this has been such an amazing revolution. And people always think, well, the collapse will happen soon because this is unsustainable, the growth of China. But it could go wrong. I don't predict it will go wrong. It could go wrong. And then you have this deflationary shock, which could send shockwaves around the world. But I think China understands, Xi is just like Putin. He's a smart guy. He's not stupid. And he studied the US and the rise and the fall of the US. And he knew that once the US had the world reserve currency, they could print the dollar, and the rest of the world needed to use it. They would become the richest country on earth. Because this has happened to China as well some 800 years ago when they had a fiat system, the first fiat money system in China. Marco Polo wrote about it.
The flying cash.
And what China is trying to do now with the BRICS Alliance, to be the leader of the BRICS Alliance and use their currency to do trade with all these BRICS countries. And it has already started. Even the Saudis agreed to take the Chinese money instead of US dollars for their oil, which is actually the end de facto of the petrodollar deal, the 1974 petrodollar deal with the US, in which Saudis promised to only sell oil for dollars. So the Chinese accomplished this. The Chinese already can use their money for trade with all these non-Western countries. And don't forget, we have over 140 countries who didn't join the Western sanctions and who are more aligned with China now. So when China is able to use their money to trade with more and more countries, they won't collapse. And they could repeat the success of the United States over the last 80 years. And that's why the 80, 90 years cycle is so interesting, because we're on the verge now. You can feel it, you can see it, that the Western financial system centered around the dollar is in decline. Even the numbers show it. And it's so easy to understand that the East is on the rise and China is leading that rise. And even the Middle Eastern countries are on the rise. I invest in Dubai myself. And the Middle East is like Europe in the 1950s and the 1960s. Not much crime, strong growth, a very happy and healthy society on average. If you look at Dubai and Saudi Arabia, so not the parts where you have wars and crises. And you see the same in Asia. There's such a vibrant economy. Of course, they have shocks. China has a shock now again. But walk through the cities in China and you'll be amazed how well developed these cities are. And this has all been happening in the last 2 to 3 or 4 decades. So I think it's too early to predict the demise and the fall of China, but it could happen. But I follow the BRICS Alliance and everything which is happening around the BRICS Alliance and the rise of this part of the world. And it's such a large part of the world. And it tells me there's a large part of this world, those are the 140 countries, who no longer follow the West for guidance. That's a big fact. And when I listen to Western media, I don't read that in our press. Mm-hmm. It's all about we are the big guys still in the West, and we tell the rest of the world how they should behave. And the rest of the world is fed up with that attitude. And they're fed up with our double standards. And that's a big change. And actually, that's the big reset. It has already started. Don't ask me when will the reset start. We're in it.
It's a progression. It's not like in one.
It's
event.
not a binary event.
Mm-hmm. So the contributing factors. So that's like on the more I would say financial side. The finance ministers of a lot of the BRICS Plus Alliance have convened together. Yeah. Prior to the actual summit that's going to start in a few days, we're today the 15th of October, just to put this into context. Yeah. And there's discussions about creating a new payment system that would allow, especially countries that are sanctioned by the Western countries like the US and Europe, to transact with each other. And Russia has, for example, had delays in its payments with its partners and so on. So it's their best interest to build such a system. How does this system, do you think, have a chance to actually materialize? And on the other side, the G7, I would call it the G7 countries, are putting pressure as well. I've also read that they pressured allegedly also some members of finance ministers and so on to not attend those meetings and to actually avoid any conflict of interest, because a lot of those BRICS Plus countries are also G20 countries, and there's a whole range of dynamics happening there. How do you see this?
Around 2016, 2015, I was invited to attend a conference in China, in Beijing, on the internationalization of the renminbi. Mm-hmm. So this was to promote the renminbi. And the Chinese invited people from many, many countries, and also from the US. But the US was absent during that conference. And when I asked an American diplomat why they didn't, why they weren't present, they said we don't want to make this a bigger deal than it already is. So the US understands there's competition coming from the BRICS. They don't like competition. They want to stick to the current dollar system. And it's very hard to build a new system. And Russia and China and the BRICS Alliance now understand it's very hard to agree on certain points, how to move forward, to agree on a common currency. So Russia stopped sending out these messages that soon a new gold-backed BRICS currency would be shown to the world. So now we're in the difficult part of the BRICS Alliance, really moving forward and building a new system. But I think they agreed that after the weaponization of the dollar by the US, they want to de-dollarize. They de-dollarized for 90% already in their bilateral trade. So I don't expect a BRICS currency anytime soon, but I do expect more trade within their own new to be built system. And we will learn over time how much of a competition this will be for the current financial system, but it's work in progress.
When we look at now the dynamics of also the interest of the different BRICS members, in the same alliance, we have countries that do not have interests that actually go hand in hand.
They're not aligned. No.
They're not aligned at all. Like India and China being two very big countries that have a lot of problems, especially at their borders. And there's some videos where you can see even like the two sides beating each other with sticks. Yeah. Or the case of Iran and Saudi Arabia, which are local rivals, is this maybe then actually you can see two sides as something hopeful, because it basically creates a common ground for those countries who actually do not have interest converging to make place for agreements and negotiations? Or can this be actually the Achilles heel of this whole alliance as well?
For me, it shows what unites them. When you have enemies like China and India, which are in a way enemies, when they unite against the West, against the US, in a way unite against the role of the dollar, that's shocking. Especially because only these two countries together is 3 billion people of the 8 billion. So we, the West, is 1.5 billion people in total. All these countries who didn't join Western sanctions is 140 countries. It's over 6 billion people. So it's a numbers game, and we already lost in the numbers game. So that's what makes this alliance so threatening and so powerful in my eyes for us arrogant people in the West who think we still design the rules of the game and tell the rest of the world how the game has to be played. We always say we have a rule-based system. Well, look what happens in our rule-based system in Gaza, in Lebanon. Not something to be proud of. How many wars did China start in the last 50 years?
Yes.
How many countries they bombed in the last 50 years? So we lost our high morale, and we can't tell the world how they should behave anymore. That's over.
And the loss of credibility also actually shows in different data. So there's the economic data, the demographics data, and the social data.
So we've had peak West, and we're going downhill, and the East is on the rise, and nobody knows where this will end. But we all know that after the 80-year, 90-year cycle, you always enter the period of crisis, wars, and conflict. And we're now in that part of the cycle. And that frightens me a bit, because if you're on a collision course, the West or the US and China are on a collision course, often these fights get worse before it gets better, before peace can be found. So there's a real risk this confrontation could grow into a much larger conflict.
Yes, you've mentioned in a couple of interviews already 2 years ago that we are already seeing the premise of World War III, and I had to think of...
Even my wife was mad at me that I used World War III 2 years ago in an interview, because how can you say, this is not like World War III, but I said we're heading towards that.
Well, it's actually a good point. I mean, maybe it's actually requires clarification, and you actually also did, but we can maybe dig a bit deeper on that, is as a bit of the logic of what von Clausewitz said about war, that the war is merely a continuation of policy by other means. And that we are seeing now the extension of that in proxy wars with Gaza, Israel,
and
Ukraine,
hybrid wars.
Russia, hybrid wars.
If the Dutch ASML is not allowed to export wafer steppers to China, that's an act of war from China's point of view. So we're in a war, let's be honest. We're not shooting each other. We do that through proxies in Ukraine and Israel in a way, because all countries supporting Israel, same countries supporting Ukraine. all countries supporting or are not joining our sanctions against Russia are the same countries who are calling for a Palestinian state, support a Palestinian state.
And we can also maybe see like also parallels of the Second World War, for example, the oil embargo, of the embargoes that were between Japan and the US, if correct me if I'm wrong, but those were all premises of the sanctions preceding wars. And when you say that you're scared and you see risks, how would you quantify them now today with all the information that you have?
I had dinner with a BRICS insider this week, and he's well plugged in. I won't say which country, but I asked him the same question. What will happen next? And do you expect a much larger conflict between the West and the East? And he said in 2 to 3 years we'll have a much larger conflict. And could even be war.
But so by this you mean a hot war, or like what do you mean? And what would it look like? A
much larger conflict, so, and could even be like a hot war. The East China has been vocal about this. If the US doesn't change course, this will lead to a conflict, and we won't back off this time. And the US has openly called, certain groups within the US have openly called for war with Russia and China. In 1927, there was one American general. So we're moving towards a larger confrontation, and I hope we can avoid it. But this 27, 28 coincides with the 80-year cycle, and
it's almost numerology, if you're familiar with this. And there's one thing that actually kind of I'm curious about is that Brzezinski back then was one of the key advisors to
President Carter.
To Carter, exactly, and he was the creator of the doctrine that who controls the Mittelland. So the Russian heartland is basically holding the key to the world, or geostrategically speaking.
He said who controls Ukraine controls the heartland of Europe, controls the Eurasian continent.
But if I'm seeing a bit like the way American policymakers are going about that, they've achieved everything but the opposite from what the doctrine is about. They pushed away Russia towards China, and giving then China capabilities of military development that they didn't have without the Russians, that the Russians have an edge on many domains, military speaking, but also socially through media and all kinds of commodities and other things. Isn't that something that also doesn't make sense to you, or how would you explain this?
Because Brzezinski, who was Polish by birth and later moved to the US, like Kissinger, who was German by birth, also said, when we cause trouble in the heart of the Eurasian continent, you won't have a continent which hosts 4 to 5 billion people living peacefully and trading peacefully, and then we in the US are an island with just 300 million people they don't need. So it's also divide and conquer. And the US succeeded by bringing harm to Europe and making the European economy less strong. Look what's happening in Germany. And now we no longer import Russian gas, we import American gas. So this is very beneficial for the US.
And now we're talking about Germany. Macron said already a couple of months ago, Europe is dying. So
we agree.
That I would say realization moment is a bit striking and a bit saddening when we really face it. How do you see the outlook of Europe now, given all this?
Well, I've explained that before. The West is over the top and is in its late mature declining phase.
Is there nothing we can do?
No. And it's also demographics. So our trend is going down.
Mm-hmm.
And other parts of the world, the trend is going up. And I, as an investor, try to put my money where the trend is going up. And that's why I bought real estate in Dubai and not in the West anymore.
Mm-hmm. So now talking about assets, that's a good one. How would you then, because you're kind of specialized in that, go about basically securing your financial wealth, considering that there is instability in the world?
Well, first of all, you should diversify because it's very risky to have all your eggs in one basket. And my model portfolio, which is quite well known, is 20%, 25% in stocks, 25% in real estate, 25% in precious metals, and 25% we keep very liquid, or you could use it to buy Bitcoin. But when people are very wealthy, let's say 50 million plus, well, of course you put more money into real estate, but the risks are increasing, so you need to get defensive and conservative. But that's easy to say for somebody who has made a bit of money and somebody who's still growing, who still wants to grow their net worth because they're younger, they don't have that much money. It's much harder. If you become conservative, it's very difficult to make money.
Mm-hmm.
But well, then precious metals, they do well on average, and they have they have a small risk profile. And that's why you're here.
Exactly. And I mean, it's also the company I work for, Gold Republic, and we sell precious metals. So that's, that's pretty clear.
Yeah, sure.
But talking about then commodities as well, there is also a big shift up in that sector. And you've covered this quite extensively in many of your articles, works, and also interviews. Where do you see the most happening and strategically important at the moment? Yeah,
I spend most of my time, I think I spent at least 10 hours a day working and studying commodities and trading commodities and investing in commodity-related companies. So that's my real area of expertise. And to answer your question, we are entering an era of shortages in many of the metals and natural resources. Especially after 2030, if you do the supply and demand studies, so much will be in short supply. And first you enter production deficits. That means that the world mines don't produce enough to cover the physical demand. Well, we see some production deficits starting to appear in many metals now, whether it's zinc or copper or silver. Silver has seen production deficits almost for 4 decades, if you're being honest. So I think silver will do very well. I expect shortages somewhere in the next few years in that market. It's a very small market. Platinum, palladium are very small markets. Russia just published a statement that besides gold, they are acquiring silver, platinum, palladium for their national reserves.
Is that uncommon?
That's very uncommon.
Why is that?
It's quite natural to have physical gold holdings because that's like base money. But platinum, palladium are not seen as monetary metals, so they're seen as essential metals for the industry. So it shows that countries like Russia, they do understand, like we do as investors, that you could have real shortages in these metals. You know, platinum and palladium are 6 million ounce per year markets. That's the worldwide prediction, 6 million ounces only.
So that's in kilo is how much more?
Sorry?
In kilo for the European listeners?
Oh, I don't even know the kilo, but it's not that much. You know, there are 30 ounces in a kilo.
Maybe to compare to gold or silver.
It's very small. Let's look at the value. Mm-hmm. The whole silver, world yearly silver mine production is around 30 billion, 30 billion.
Ounces.
And dollars.
Dollars. Yes, value. Okay.
Yeah, dollars. So that's a very small market. Platinum and palladium are even smaller. So there's not much money needed to really change these markets.
Mm-hmm.
And these markets have been overlooked for such a long time because there was always plenty. This will change, and that's why we as commodity investors in our fund have been studying the world in the last 10 to 15 years where the best still undeveloped mining projects can be found, and we invested in, let's say, the top 100 of those.
Mm-hmm.
It is a long-term play because we expect prices and valuations will get much higher when people will begin to understand shortages are developing.
And so those gold miners, they also face operational costs. They have labor, fuel, equipment, all that. How do you go about tracking the profitability of, let's say, miners? And you specialize, if I'm not mistaken, in junior miners.
Yeah.
But then compared to also the price of what they mine. In that case, it would be gold, silver, and others.
Yeah, we position ourselves through our portfolio in producers. That's only a small part of our portfolio. And the producers, they see higher margins now. The price of energy is going down. Energy is 30% of their cost base.
It's going down.
It's going down. The price of energy has been going down in the last 2 years.
But before we were saying that we might see a structural high energy,
Yeah, but if you look what happened over the last 18 to 24 months, the price of oil, energy has come down. So, and the gold price has been going up in the last last 18 months. So the margins are exploding. And we're on the verge of getting the Q3 numbers now of gold and silver producers. And you will see some positive shocks there. And that explains why these shares are starting to move up now. And once an ounce of gold is worth $2,700, when I buy it at your bullion web shop, that ounce in the ground, of course, is also increasing in value. But that's just starting now. So you still can buy ounces in the ground valued at rock bottom prices, while the ounces above ground are becoming much more valuable. And this gap between the ounces, the value of ounces above the ground, the spot price, and the ounces in the ground, in situ, that gap is going to be closed in the next few years. And that always happens when a cycle matures. So we're at the start of a new generational bull market in gold and other commodities, in my view. And that's also the view from the Elliott wave analysis, because commodity prices and valuation have been coming down for 15 years. The last top of the cycle in commodity valuation was 2008. That's when I started the commodity fund. Very bad timing with them. Yes, indeed. But we used those 15 years to really study the world, learn the business, and now at rock bottom valuations, we are blessed because the rise and the start of a generation new bull market will bring a lot of wealth.
And this bull market, because this cycle took 10 to 15 years, how long do you expect then this bull market to be?
The downturn took 15 years. So the cycle, and that's known about commodities, takes decades. So you have like 30, 40, 50-year cycles. Actually, I read a research report based on the Elliott wave analysis of commodity markets that the start of the generation bull market is just behind us, and this bull market will run till 2052. That's quite a long time. Yeah. But look what happened to real estate. Real estate went up over 40 years, 45 years. Stocks went up for decades and decades. So major bull markets can run for decades. And that's what I always tell here in-house because many people who work here joined us in 2011. They only experience the bear market. They think a bear market is the natural state for commodities. No, you will experience a bull market as well, and this bull market might take 20 or 25 years. And of course, you'll have some corrections. But the last bull market in commodities was between 2000 and 2008. It sent up shares in gold miners over 1,000%.
Wow.
So that's why we are still in business, and that's why we still see net inflows. We educate people about these cycles. You need to buy when the valuations is low. Commodity-related companies had the lowest valuation in 2020, the lowest valuation in 120 years compared to the general market.
But what about, let's say, lower net, like, because I guess your fund is more for higher net worth individuals. What about maybe some advice for the people who have a few €100?
Buy silver.
Just buy silver. Easy.
Yeah. Silver is 40%. You buy silver with a 40% discount compared to 2011 or even 1980. While gold is making every day a new all-time high, silver is still on sale.
It's what people say, right? That analysts say that when there's a big surge in the gold price, silver tends to follow and even surpass. If we look at the gold-silver ratio.
It's gold with ecstasy.
Or the poor man's gold.
But I've been communicating with a guy who was checking out with dealers in Asia about the available physical gold and silver. He informs me there's hardly any physical silver in size available in Asia.
Wow. And now we're talking about geography and commodities. Which countries and regions around the world are best positioned to actually take advantage of?
The BRICS countries.
So there we go again.
All countries in Middle America, Latin America, Africa, Middle East didn't join our Western sanctions. That's where we have our investments. There's a lot of commodities to be found in the Middle Americas. Mexico is strong on silver, Peru. Then you have the Andes, where all the copper has been found. There's a lot of silver there as well. Actually, the name Argentina, it's
Argent. Argentine.
That's the French word for silver.
Yes.
Now even the Saudis opened up their country to exploration companies because there's a lot of gold to be found and copper to be found in Saudi Arabia. They never needed it because they had the oil. But now they're diversifying. And then you have all these countries, in the Ring of Fire, Indonesia, Papua New Guinea. You have all the countries in
Central Africa.
Yeah, and also near Brazil and French Guiana. There's so much to be found in these countries. That's where we invest.
How do you think the sustainability ESG policies and agenda impacts the mining?
It impacts it quite a bit because institutional money is looking very strongly at ESG. We always feel very comfortable because we only invest in listed companies, and when the company is listed on the stock exchange, they take these ESG aspects quite serious. If you compare that with the cowboys who are in the Amazon looking for gold, but sometimes it has been overdone. The ESG. There are many institutional investors who are no longer allowed to invest into oil and gas or even mining. And, we can't do without mining. For the green revolution, we need copper.
And silver, right?
In a Tesla, there's over 100 kilo of copper in a Tesla. A normal car is just 10 kilo.
Wow. To round off this interview, I wanted to ask you, it's kind of the last question. You've published on your Patreon a letter from Cleve Johnson about the potential scenarios for this reset. And that's obviously, I encourage everyone who didn't read the book to really read it, because I think it's one of the most encompassing books to understand this system. With also Lynn Alden's book. I think for me, those two books are on par. But
this one you can download for free at our website.
So you can also download it for free. What are those reset scenarios and how will they materialize? What is the line of thought behind this?
The jury is still out. I don't have a crystal ball, but I can promise you there will be more financial repression. And that means your freedom, financial freedom, will decline. And I'm investing in real estate now in Dubai because I'm still allowed to take money out of Europe and invest in real estate somewhere else. There could be a law that I'm no longer allowed to do that. What happened in China, one day it was no longer allowed to bring your money to Hong Kong from mainland China. And now it's very hard to get money out of China. Mm-hmm. So you always have to move when people call you silly. And once people say, that was smart, it's often too late for them to do the same.
But in the
people called me stupid when I was buying gold and silver in the early 2000s. People called me stupid when I was buying apartments to let them to expats in the early 1990s. And now everybody is doing the buy-to-let market, and now they're stopping it, for fiscal reasons or whatever. Mm-hmm. It's not interesting anymore for an investor, average investor.
So the financial repression, what other form would it take?
Can be anything, but closing on and off ramps, that's the best way to put it in English. And so they make sure you have money, but you can no longer use it to buy certain stuff. We could even have a closing of the on and off ramps for fiat money. You can only spend your CBDC. Mm-hmm.
Which is the central bank digital currency. And in that case, in Europe, the digital
euro. And the old money, the fiat money, in which you have your savings, might be... if you have as a business, if you have a bank account with Rabobank and you were using that to buy Bitcoin, they blocked you. That's just in Holland, We have a free capitalist system, we always tell the rest of the world. But that's financial repression.
And the exit tax that you also mentioned?
That's the new idea, to have an exit tax. So you'll get more financial repression. And let's see what happens. But
so do you exclude any coming of a gold standard or a revival of a gold standard?
No. We're in the big reset already. And the big reset, I always said, gold will become more important within the system through market forces, or because central bankers will bring gold back within the system and revalue gold, or the price of gold will be revalued by market forces. Well, what are we seeing now? Gold's being revalued by market forces. And I predicted that the US would lose its status as the sole world reserve currency supplier. And there would be a lot of competition coming from Russia and China teaming up. And that's not because I have the crystal ball, but I watched for the signs, and I read a news report even in 2015 that China and Russia were saying they were seeking a reconstruction of the current world order together. It was 2015, it's 10 years ago. Wow. People ignored it. I have a slide in all my presentations for the last 10 years showing that to people.
And central banks, as you mentioned as well, in Russia and China, piling up on gold since the 2000s as well.
But now Poland is buying a lot of gold. The Czech Republic is buying a lot of gold. Hungary. So even in Europe, all countries east of Germany are buying gold, one could say.
Because they know they see this coming. Or as you said, the market forces.
Well, they are central bankers. I see it coming. They know it's coming because they discuss it with their central bankers, where I'm not allowed to sit in. Yeah? Watch what they do, not what they say.
Thank you, Willem. Thank you for your time and knowledge. It's also always a pleasure to see you and meet you. Do you have any last remarks or things that you want to share to the viewers?
We covered all.
Thank you. Thanks for watching. If you liked this episode, give it a like and don't forget to subscribe. Leave your actions down below in the comment section. And if you want to watch more videos, feel free to check the most recent video, but also any other video that we've had published on the channel before. See you next time.